Good morning, welcome to our earnings season special, and we're right slap bang in the middle of earnings season on Wall Street. Q3 season continues. So far so good. 77% of companies that have reported to date have beaten expectations, and that's against 16% that have missed expectations. The blended earnings per share growth is actually looking like a loss of around 1.5 cents or 1.5%, and revenue growth though up at 3.5%. So I think the bullishness that you're seeing in equities at the moment is probably down to the strong revenue growth that continues. Whilst earnings per share have declined a touch, the revenues growth is still there, and that's one of the key reasons behind this bull run that we're seeing continue, and the S&P 500 making fresh all-time highs. Quick update first though on the UK. We've had some numbers out today from Standard Chartered. Shares up after posted a quarterly profit of $1.2 billion. That was up 16% from the year before, and ahead of analyst expectations, which stood at $1.1 billion. Overall, you've got to say that the impact from the US-China trade war, slowing growth in China, the ongoing prolonged protests in Hong Kong, which is starting to hit growth there, none of that seems to have had material impact on Standard Chartered. It's doing well. A good quarter for CEO Bill Winters. Also, whilst equities might have been equity trading's maybe been a bit soft, and equity markets not so good, the bond market continues to go great guns, and Standard Chartered is more of a bond market player than it is in equities. The return on tangible equity, a key profitability target, up at 8.6% for the 9 months year to date. So it's on track to hit that 10% level in 2021, but it does confess that there are headwinds from lower interest rates and slowing growth. But on the whole, good numbers from Standard Chartered. Next, UK retailer Bellwether stock posting very strong online figures, up 9.7% in the third quarter, but in-store sales were down 6.3%. So product sales overall up 1.6% for the quarter. Overall, including income that they generate from interest from offering people loans to buy things, that was up at 2%, and they've stuck to the full year guidance of 725 million in profit. But the shares are off. They suffered the warm weather in September meant shoppers stayed away, but the cold weather in October meant they came back in, and that seems to be maybe why the shares have come off just a touch. The management guidance is that there was October sales numbers won't be replicated in November, December. So sales that they were expecting in November, December have been brought forward into October. But on the whole, still looking in good shape. Deutsche Bank, meanwhile, 823 million euro loss for the quarter, on 15% drop in revenues. Bond trading, what's left of the investment bank, suffering a 13% drop in revenues at the fixed income bond trading department. They say that's down to lack of volatility in currency markets, which is included in that figure. Shares were off quite heavily, around 5-6%. The main factor in the loss is really the restructuring costs. They're going through a massive restructuring as they shed workers. It's costing money in redundancy payouts and in reshaping operations. So the core bank, not the bad bank, posted around €1 billion of loss. That's to be expected, but the core bank posted €352 million in profit. So management's actually quite comfortable with, but shareholders not so keen. Those are the big ones from Europe this morning. Today, later on, we've got Apple after the close. We've got a special preview of that coming up later on X-Ray. But suffice to say, we're looking at iPhone sales, what the iPhone 11 sales guidance is like for the coming quarter, what the numbers from China look like, and what the services numbers are like, as well as wearables. We need to add that one in. It's now 10% of group revenues. Services now about 20% of group revenues. So these are parts of the business increasingly important, and we will be looking at that in a bit more depth. Facebook, meanwhile, that's the other one that's reporting, the other big tech stock reporting after the close tonight. I think you're looking at let's just have a quick check. We're looking at $1.91 earnings per share on revenue growth at up 26%, $17.4 billion. Last quarter, really strong daily active user growth, really strong mobile revenue growth, likely to continue, but the question mark hanging over it is the regulatory scrutiny and possible antitrust measures being brought in the US. So lots to look forward to today, lots already, but we'll try and bring you some more updates for you throughout the day, and we've got you that Apple preview special later. And if you've got any questions on earnings and so on, send us a question at xray@markets.com. Thanks for watching.